Dividend stocks are a great way to make passive income in the market, especially if you're a beginner, because you don't have to do much other than buying the stock and holding it. So today we thought it was a good idea to help you find dividend stocks that pay a high passive income per share.
Hi, we're the Wealth Twins, and today we're going to give you 5 high dividend stocks for passive income. And not only that, we're going to rank these stocks from lowest to highest when it comes to dividends per share. So let's get started. Coming in at number 5 with a dividend per share of over $2.04 is VFC Corporation, ticker symbol VFC. VFC is currently trading around $33 a share, which is off its 52-week high of $78. They own the North Face brand. They own Vans. They own Timberland. They own Dickies, and they also own JanSport and Eastpak. These guys are in the apparel business. This company is taking a hit because it does offer discretionary items, because North Face, Timberland, Dickies, all these are brand items that you actually don't need to buy, and consumers are pulling back in terms of fears of recession and also inflation. They're starting to buy more generic products that can keep money in their pockets. On top of that, the company is suffering from a lot more inventory. Even though this is the case, this company does have a lot of brand loyalty. So the company is able to bring in some earnings. The company is going through some problems, so that's what is being reflected in the share price. But with that high of a dividend per share, this is definitely a passive income play.
Next up, we have Altria Group, Inc. Now, if you don't know what Altria Group is, it's the new name for Philip Morris in the U.S. Altria Group has a ticker symbol MO, and it currently pays a dividend payout of $3.76 per share. Right now, you can buy Altria at around $45 off a 52-week high of $57. Now, if you have noticed, Altria has been in the news lately. It's missed its earnings expectations last month, primarily because of its stake in Juul cigarettes. The FDA has been cracking down on e-cigarettes right now because they contribute to the increase in teen smoking. Juul was about to file for bankruptcy, but it's been bailed out. But that is still a problem for Altria. Now, they had a non-compete with Juul, but that ended back in September. So what Altria recently did was sign a partnership with Japan Tobacco Corp. And what they're doing is going to put out a bunch of new products that are smokeless products, and they're heating tobacco. So they call them heated tobacco sticks or heated tobacco capsules. They think this is a big move that's going to help push them forward in the U.S. market because it's been very successful in Japan. It still remains to be seen if smokeless products are going to be a success in the U.S., but they're betting on it. Altria is a vice stock because it does go into the business of tobacco. Some investors may have a problem with that. But if that's not an issue for you and you're looking to make passive income, this is a dividend stock you may want to take a look at because it does pay a high income per share.
Coming in at number 3 on our list of high dividend stocks that pay passive income would be Dividend Energy Corp, ticker symbol DVN. The company right now is paying a dividend per share of $5.17. The company's stock price is $70 off its 52-week high of $78. Now, Divine Energy Company, if that name didn't give it away, I will let you know this company is in the oil business. And as everyone knows, oil companies have been raking in the money the last couple of years. Now, when it comes to the barrel oil prices, they are going down. But that high price that was over the summer because of the Ukraine war, those prices and the money that these companies made off that still made these companies very profitable. These companies are cash flow rich. Now, Dividend Energy Corporation is using that money that they made over the past couple of years to do 2 things. 1, pay out dividends to their shareholders, and also to buy other cash-rich energy properties. Dividend Energy Corp is not only paying a high dividend for their shareholders, they're also buying back stock with the amount of cash that they have. Since it's a company that deals with oil, we have to worry about what's going on the world stage. We're talking about maybe a global recession. We're talking about China with a zero COVID-19 policy, which can affect demands on energy. We also have to talk about what's going on with OPEC. Are they going to release more oil, or are they going to keep restricting the barrels that they're letting out to the world? All these factors will play a part in what's going to happen in the oil industry and also with oil companies. So since we don't know the future, and there's so many things up in the air, only thing we do know that this company is paying a very high dividend per share, and it could be an income play for those that are looking at it.
Coming in at number 2 is Icahn Enterprises, ticker symbol IEP. Now, this is Carl Icahn's holding company. Right now, it's paying a dividend per share of $8. That's pretty high, okay? Right now, you could buy a share of Icahn Enterprises around $50. That's off its 52-week high of around $55. Now, the thing about Icahn Enterprises is that it's very diversified. It has about 5 different business segments that it invests in. Now, when it comes to profits, a lot of people complain about the profits of Icahn Enterprises, but this is not a growth stock. When it comes to their dividend payout, a lot of people question if it's actually sustainable because it's so high. But one thing they're doing to make sure that they continue to pay out their dividend is that they're paying down their debt. Paying down that debt frees up more capital, gives them more cash flow, so they're able to put that cash towards paying the dividend to their shareholders. Another reason people are concerned about this company is that Carl Icahn makes a lot of decisions in this company, but he's also 86 years old. Now, one of the concerns when it comes to Carl Icahn's age is who will take over the company after Carl Icahn can no longer run it? If you look at the 52-week high and where it's trading now, it's pretty stable. One thing is for sure, though, they pay their dividend consistently, and it's a high dividend. So it's something you may want to look at when you're building your portfolio around passive income.
Now, if you thought Icahn Enterprises was paying a high dividend, you're going to go crazy when you hear number 1 of our list. Our number 1 pick for high dividend stocks paying passive income is Pioneer Natural Resources, ticker symbol PXD. This company is paying a dividend per share of a whopping $26. Okay. Now, the stock for this company is going around $250, but that's off its 52-week high of $288. Now, you might be saying, what is this company doing that's offering a $26 per share dividend? Again, we have to go back to what type of company this is. This is also another energy company, just like Devon Energy Corp. These guys are cash rich, and they did a great job in terms of getting wells that were profitable and also just making money when oil was very high. They have been paying a dividend to their shareholders, and they've also been acquiring other companies trying to get their cash flows too. On top of that, they're also reducing the amount of debt that the company has. With a dividend payout this high, many are wondering, is it sustainable? We don't know, but if you're looking for something in your portfolio, you're looking for high dividend stocks that are producing passive income, this is definitely one to look at.
Now, based on the list we picked 5, but are there any high dividend stocks you would recommend? If so, put them in the comments below. We would love to know about them.
Now, those are our 5 high dividend stocks for passive income, but we have to warn you, even though these stocks are paying high dividends, you have to understand there's something behind it. Stocks that pay high dividend income pay it for a certain reason. So you cannot just go into these stocks saying, I'm going to buy just because they're paying a high dividend. You should always be asking yourself a question at the beginning. Why is this stock paying such a high dividend compared to its competitors and compared to the market in general?
When a company pays out a high dividend, they're using it as an incentive for people to buy their shares. You have to go with other information and do your research, and just don't go by how much they're paying out per share, because that dividend can be cut or it can be completely taken away. There are many reasons why they could be doing this as an incentive. So make sure it's not something negative so that you can look away from the other negative things and buy their shares.
Making passive income is great, but what's better is making it sustainable. Dividend investing has a lot of different strategies you can use to make passive income, but you have to decide which strategy is best for you. Are you a short-term dividend investor that's looking for quick wins, or are you looking to be a long-term investor who's looking to make passive income that's sustainable over a long period of time? At the end of the day, your goal will dictate your strategy. If your only goal is to make passive income and the first thing you're going to do is just find all the stocks that have the highest income, well, if it was that easy, everyone would do it. There is a risk to this strategy, so do your due diligence and understand that there's more behind why a company is paying high dividends. In the next video, we discuss 3 ways to make passive income using different dividend strategies. We teach about the pros and cons and also how anyone can use those strategies to make passive income.
If you like dividend videos like this, make sure you subscribe to the channel and share it with someone you care about. And we'll see you in the next video.